topic of today's video is going to be how to recession-proof your business. And the key to that is going to be recession-proofing yourself. So what does this all mean? Well, let's go ahead and dive right into it. So, how do you build a business, build a company for yourself that is recession-proof? Well, there is no guarantees in any of this, but these methods have worked for me over the years. Well, the first thing you want to do is you don't want to become what they call over-leveraged. So, back in 2008, during the financial crisis, I'll just brush over this quickly. The trouble with the banks was they became over-leveraged, and they did not have collateral to back up all of the credit that they had out. So essentially, the biggest issue that they created for themselves was they were giving out mortgages that they knew were called subprime. And they were giving out these terrible mortgages. The rating company was giving them an A, which meant to investors that it was a safe investment. All the banks basically did was then they purchased insurance, so if the mortgage was to default, the insurance company would pay out. They moved the risk off their books, they then had that money and they reinvested it.
Okay, I just want to cut into the video for a minute. So essentially what the banks did was they extended their own credit lines, kind of what they do to a business owner, whether we're talking business loan or a credit card. Either one of these things can get you into a lot of trouble, especially when you feel that a credit card is actually an extension of your money when it isn't. It is not your money. It is someone else's money that they're just giving to you temporarily. And that's how a lot of guys get in trouble. And that's how the banks got in trouble, because they gave themselves credit that they did not even have.
So how do they determine how much to loan you and what is your credit score? A lot of guys say that the credit scores are meaningless, but that's not true, because everyone under the sun is going to look at it. So your credit score, for lack of better words, in layman's terms, is the amount of debt you have / what type of debt you have versus how much money you have out on your credit cards versus what do you own personally as collateral that they can take versus how much liquid cash you have in the bank. Money that you could pull out of the bank tomorrow and have it in your hand to pay a debt. So that's how the credit scores, in layman's terms, is accumulated. And the point that I want to make is the further in debt you are, the lower your score will go and the more dangerous you become. So you don't want to become over-leveraged. So one of the ways to do that is if your business is growing and you're getting more and more work, as this economy has been booming recently, you have to try to make do with what you have almost.
So what I'm trying to say is that I'm not saying to not buy more equipment or vehicles or hire more people. What I'm saying is, as you're growing, look at the work that you are accumulating. If it's a one-off big job, it may not be the smartest thing in the world to go out and buy equipment just to complete that job and then not have any job after that that could rival what the previous project gave you. So you don't want to buy equipment and vehicles with the simple notion of having a one-off job. Try to make do with what you have to get through that big job, make the money, and move back on. If you see that you're getting these big jobs, job after job after job after job, that you have to buy more equipment to do it, then that's when you pull the trigger and you do it. You don't necessarily want to just buy something to complete one project.
So one of the things that I look at is when the economy is booming, a lot of these GC companies, this is just an example in my local area, will sub out work to other contractors. Now, this may be work that they would do themselves normally, but because they're so busy, they'll sub it out. So if you're now accumulating more work because you're getting these GCs work, that work is going to evaporate when the economy tanks. So when you're looking to build your business and you're looking at the upside potential growth versus the downside, realize that customers like these are going to leave you when times get tough. And if you grew your business and expanded on the basis of them keeping you busy, well, you're going to run into a problem. And you would say, well, how do I know that? Because that's how a lot of guys got pinched. They didn't look at the quality of their customers that they had. And I'm not saying these people are bad customers, but when I mean quality, are they repeat customers that are always going to need you? So I had a customer whose partner was a concrete man, but when they were busy, they would call me to do their work. But as soon as things got a little bit bad and got a little bit hard, they started doing the work themselves. So that was a chunk of business that I then lost. However, I realized that if times got tough, that's what they were going to do. So I actually lost quite a few houses a year because of that. Then they wanted to come back. I worked for them a little bit, but when I saw that I was busy with customers that would need me consistently, I decided to let them go.
So basically, when you're building your business, you want to build it on a solid foundation. So, like when we dig for a house, we put the footing on rock solid ground. If you were to build your business based on contractors like that who do their own work or could, and the only reason they're not doing it now is because they're so busy making money elsewhere, you're actually building your company on soft ground that once you start putting the stress and the load on it, it's going to start to move. So that's what you want to avoid. So when you're building your company, yes, you can work for these GCs or contractors and you can make money with them, but you don't want to build your company based on these customers, because once the economy gets a little tough, they're going to start doing the work themselves, which is fine. But you don't want to buy equipment, trucks, and hire employees and build yourself up on what the work that they're giving you. You want to build your business on a solid ground with customers who are going to call you consistently. Or if you're working for homeowners, then it's a little different. But you guys get my point. You don't want to build your company on soft ground. Okay, so the last phase of this commentary is going to be keeping your equipment, maintaining it, and running it till it does not run no more. Now, what I do is when I buy a piece of equipment like this excavator here or a truck, I try to keep it until it doesn't go anymore, because the resale value, you're not really going to get your money out of it. And to buy equipment consistently, just to say you get the tax benefit, there's not enough benefit to it. You're still spending too much money to keep up with it, and you're not making enough profit. It is, in my opinion, it is more profitable to take the money and take it yourself, put it in an IRA or invest it in something, than to keep buying machines just because you feel you get a tax break. So don't get lured into that. Now, the other point is with the equipment. Now, while yes, you can upgrade in size, but the thing is, I would keep the machines that you have and run them till they don't go anymore. Kind of like this 337. I'm just going to run it till it doesn't work anymore. You get a couple of dollars for it, then you upgrade to something else. You get every dollar out of that piece of equipment that you can possibly get before it starts nickel and diming you to death. Similar to how I run my trucks. The F450, I put a ton of money into it. I did the head gaskets, the high pressure oil pump, the EGR cooler, put a fuel tank in it, although the fuel tank was my own fault because I accidentally put gas in there. Go figure that stupid move out. And I did a couple other things to it. I put brakes in it, and someone came and they bought it now. A guy came and I sold it for $4,500. But my point is that I ran that truck till it didn't pay anymore. It needed a transmission. It didn't pay for me to keep it. So I upgraded to the switch and go, and then I'll keep this truck as long as I possibly can. So don't get lured into the notion that you'll get a tax break or it's a write-off, or just keep turning over equipment that still has life in it and you're selling it to someone else, and then you're taking on another payment that you have to make, and you're not really getting all of the profit out of that piece of equipment. Now, we already covered if you're going to lease or rent in another video, but my point is that maintain the machines, try to keep them as long as you possibly can, trucks, all of your tools, all of the equipment, because it's far better to spend less money and invest it in yourself than constantly investing it in your business, and then the money is just gone. You gave it to Bobcat, you gave it to Caterpillar, you gave it to Ford or Chevrolet or Rigid or any tool company. So if you see you need to upgrade to a bigger machine, then you pull the trigger and do it. That's a fine move to make. Even if that little machine may still have value, like the 328. When I upgraded, I didn't need it anymore. I needed something larger. That's fine. But if I was to just keep flipping over, buying a 337 and then flipping it over to an E55 and then flipping it over to the next thing, you see how you're not making as much profit out of that piece of equipment as you possibly can. So that is also something to keep in the back of your mind. Guys, I hope this video has helped you out. If you have any questions, comments, please leave them down below. Please remember to subscribe if you like what you see, and we'll have more content coming soon. Guys, have a happy new year if I don't talk to you by then. Be safe, take care, and I will talk to you guys soon.